All about credit cards. I'm going to cover a lot of topics. Credit cards are really complicated. There's a lot of material to cover, but you're going to come out of this module feeling really knowledgeable and probably surprised at how good of a value credit cards can be. But of course, they can also be really awful if you end up paying thousands of dollars in interest on your credit card debt. So, credit cards are unsecured. Most of them are. That means that you borrow money from the bank and they have no collateral. And that means that the interest rate is higher because of that lack of collateral, because default is a bigger risk for the bank. And default would mean that you fail to pay back the money. First off, I want to talk about the grace period. If you have a credit card and you pay off the balance in full after the end of the statement every month, you won't pay any interest at all. And that's called the grace period track, and that's something I made up. I didn't even really know too much about this until I looked into it, because I've always paid the balance in full on my credit cards. But if you fail to do that within the grace period, which is usually 3 weeks after your statement ends, then your charges on the next statement and every statement after that are going to have interest collected immediately, rather than having that 3 weeks period after the statement. And in some cases, you won't even have any time after the charge is made, because the interest will start immediately rather than after the statement ends. So if you're off of the grace period track because you haven't made your payments in full, you can actually get back on it by paying in full this month. But you need to probably overpay, because there'll be what's called trailing interest that you still owe on the present charges. And the only way usually to overpay is to push a bill payment from your bank by going on to your online banking for your bank and setting up your credit card as a bill payee and sending it more money than you actually owe at this time. So credit cards have very high interest, although it is lower than payday loans. So if you have both, then you're better off using credit cards than payday loans. And a lot of times people using payday loans, they can't get a credit card because of past credit problems. So that usually probably doesn't apply. Now, when you make purchases with your credit, the cash advance interest rate is something to watch out for. So if you're loading money with your credit card to, say, American Express, Bluebird, or Serve at Walmart, or if you're making certain types of purchases, such as buying gift cards with a Citibank card, you'll probably be charged a cash advance interest rate and fees. And with that, the interest rate is usually around 25%, which is higher than your typical purchase interest rate of 17 to 20%. And it takes effect immediately, so there is no grace period. Now, you don't know if something's going to be coded as a cash advance. In fact, often it's not. And one way to avoid cash advances is to call your issuer and tell them to reduce that to 0. So you don't want any cash advance limit on your card. And most card issuers will do that. Some will not do that, such as Citibank. They'll just say, well, we can only lower it to $100. But you want to do that anyway, and that way any charge above that, which is coded as a cash advance, will just be declined. Because you can't know in advance how it's going to be coded for sure. Now, if you fail to make your minimum monthly payment on your credit card, they can usually raise your APR to the penalty rate immediately. And that's typically 30%. That's a lot of money. That's 2.5% a month. So if you have $10,000 that you owe, that means now you're paying $250 a month in interest. And some cards don't do that, like Discover doesn't have a penalty APR. Discover has pretty good customer service in general compared to a lot of cards. And then there's another clause to watch out for. It's called universal default. Universal default means that because you failed to make the payment on one card, all of your other cards can then increase the interest rate, even if they're held by other banks. And that's really awful, and there's a lot of moves afoot to get rid of that, but it still goes on, and you want to be careful of that. If you don't make your payment, you should still make it late, because if you go 90 days and you haven't paid your credit card, that's going to have the worst impact on your credit reports. So credit cards are very dangerous. You could easily wind up paying thousands of dollars in interest, and you could also get in over your head and owe money that you can't pay back in the near term or even over years. It'll just take forever to pay it back. When you're trying to pay it back, you need to pay more than the minimum payment. If you just pay the minimum payment, you're going to take a long time, and the amount of interest that you're going to pay is probably going to be about double or more of the items that you actually purchased. With credit cards, though, you're often offered a lot of money as incentives, and this is large. They can be large sign-up bonuses, and they're very lucrative, and they're not income, so they're not taxable. They're considered a rebate on the purchase. If you notice, every bonus will say get $500 when you spend $2,000 or more, or something like that. And so those are a good way to make money. I like to do that. I've gotten probably over $10,000 in bonuses over the years. And then after you get that bonus, sometimes the card still has a reason to keep it. Like with the Discover It or Chase Freedom card. Those offer 5% back often on categories such as grocery stores or gas stations. And then during the rest of the year, they offer 1% on everything. And then other cards sometimes offer 2%. So that's pretty good, because then if you pay your balance in full, you're getting 2% more than you would with cash. And you're not being charged anymore because the merchant that you're buying their goods from pays that cost of processing the credit card. But do be careful with rewards, because a lot of programs will say get 50,000 points. And sometimes those points aren't worth a penny each. They might be worth half a cent or even less. PNC Bank on the East Coast is one example of that. And their points are basically worthless. And you shouldn't sign up for their card unless it was offering like 200,000 points, because otherwise you wouldn't be getting a good deal compared to what you'd get with a different credit card. Now, to find out about that, you want to do online searches and look at forums such as Flyer Talk and Fat Wallet. And you also want to look at the card's website and other sources. And anecdotal sources, in this case, often give you better information than the card issuer itself, because they won't tell you the problems that other people will tell you. When you get a sign-up bonus, usually you can't get one again, either for your whole lifetime with American Express cards, or with other card issuers, it might be 2 years. So make sure you get the best bonus. Often if you go to the website, they'll offer $100, but if you do a Google search, they'll offer $200 or $300 on there. So credit cards do help you build credit a lot. And every month that you make that on-time payment, that's at least a minimum payment or more, you're building up a positive payment history. And then if you have a missed payment, you have so many payments that you made that you still only missed a couple percent or less of your payment. And that's why it's good to start early if you're responsible. You don't want to use credit cards if you aren't going to pay them back in full every month. So multiple cards can be confusing, and you should track them online. You should not just wait for your statement to come in and look at that. You should be looking at your online banking and online credit card every couple days, I would say, and you can even do that from your phone now. And if you're going to have multiple different payment due dates, and you need to keep track of those, because if you miss a payment, you'll have that penalty APR, and you'll have other ramifications. So use a calendar to keep track of that. You can also use an app such as Google Calendar, and you can even set up automatic payments if you want to. But be careful with that, because you don't want to overdraw your checking account. You want to make sure, if you're using automatic payments, that you always have enough money to cover those payments. So cardholder benefits. These vary a lot, so I'm only going to talk about a couple of them. The most common ones that pretty much every card offers are chargebacks and extended warranties. Chargebacks are also called disputes. And when you open a dispute, the reason you would do that is if a merchant didn't provide the service as advertised, or is giving you issues with a refund that you believe you're entitled to. Typically, you will be able to win that dispute with the card issuer if you provide documentation. And whenever you make a purchase, let's say that's risky, like by online or by calling in about something, you should use a credit card just so you have that type of leverage, and you don't have to worry about them just taking your money. And of course, when you buy stuff in person, if you use cash, you can't do a chargeback at all. You're at the mercy of their return policy, and you might be able to complain to the Attorney General, Better Business Bureau, and other agencies. But if you have the chargeback, you don't have to go through all the effort, and you might get your money back without even having to make those complaints. Extended warranties are very nice. I've never used one. I have them, of course, whenever you buy an electronic item or other items, they'll double the warranty. So after your manufacturer's warranty expires, you can still file a claim with the card issuer and get that item repaired. Annual fees. Annual fees are not usually worthwhile. If you have a card with an annual fee, you probably should cancel it, but you don't have to cancel it right now. You can actually cancel it right before the fee, or in most cases, up to 2 months after the fee. And then they'll refund the entire fee, even though you've gotten the benefits for those couple months. So if you have this annual fee, you want to look at how much value you're getting out of the card, and it has to be a lot more than the annual fee. If you have a card that, say, pays like 2% back on everything and has an annual fee, and then you're comparing it to a card with 1% back and no annual fee, you're going to have to spend a lot more money on that 2% card to not only, make up for the annual fee, but also to exceed what you get back on the regular card with no annual fee. Now, charge cards. Charge cards, the credit cards are pretty similar. With the charge card, you're expected to pay back the balance in full every month. If you don't pay it back, then you're going to have really high penalty fees. So where a credit card is revolving, meaning you can carry over debt month to month, with a charge card, you're expected to pay it back every month. It's not revolving. And that could be a really good motivator for you to not carry a balance, because the penalties are so high. But you don't want to get in over your head and have to pay those penalties, because they'll be higher than credit card interest. And typically, American Express is the only big issuer of charge cards, and they have quite a few of them. They have the American Express Business Gold Rewards card is one. I can't think of the others offhand. With the interest rates on your credit cards, you can actually call in and negotiate those lower, especially if when you opened the card, you had worse credit and now your credit score and credit report has gotten better. And you want to do that pretty often if you carry a balance. If you don't carry a balance, you don't really have to worry about that, because if you're paying every month, no interest is assessed anyway. With credit cards, there's a few different networks, and this can be confusing if you're unfamiliar with it. There's the Visa and MasterCard networks, and those networks are actually not card issuers directly. So when you get a card that's a Visa, it'll come from a bank or a financial institution. But Visa doesn't issue credit cards, nor does MasterCard. Discover is a card issuer and card network, and they actually have a monopoly on Discover cards. So any Discover card comes from Discover Financial Services, and they have their own network and their own cards all in one. American Express is both a network and a card issuer, and they license that network out to other banks. So you could have an American Express card be directly from American Express, and those ones are generally better. They're more prestigious, harder to qualify for. And you can have American Express cards that a particular bank issues, such as Wells Fargo or Bank of America. I think they issue American Express cards. Often when you go to pay for something, you'll see that Visa and MasterCard are included, but Discover and American Express are left out. And that's because they have to pay higher fees when you use those cards, because the merchants are usually charged a larger percentage of the purchase price. So whenever you have the cards in your wallet, you should at least have one Visa or MasterCard, not just all Discover and American Express cards. And then sometimes you'll see Visa be excluded. I've only seen this once, and it's actually with University of Central Florida for their payments to pay your tuition or housing expenses. They'll take every card but Visa. I have no idea why they do that, because usually Visa costs less than Discover or American Express. But keep that in mind, and also when you get a credit card, usually they'll offer Visa or MasterCard for the same type of card. That's actually becoming a little less common, but there are multiple flavors of the same card across different networks often. But most importantly, you just need to not ever pay interest. So if you make a charge with your credit card, make sure you have the money saved to cover it. And it can't be money that, oh, I'm pretty sure I'm going to get that money, but you're not positive, because that's how you get started down the road of credit card interest and terrible crushing debt. So make sure you're pretty much guaranteed that you're going to be able to pay that. Don't just like base it on, oh well, my mother gave me $500 last month, so she'll give me it this month, so I can charge that money in advance and I'll be able to pay it back later. You shouldn't do that. In fact, you should have enough savings that never becomes a concern, and that much savings will allow you to not fall prey to the credit card trap. But you'll be reaping the benefits of rewards and cardholder protections and lucrative sign-up bonuses. In the next module, I'll talk about your credit scores and credit reports, and a lot of that information will help explain the purposes and effects of having credit cards.